All right, in this video, we're going to be talking about Fibonacci sequences. I always find it funny. Educators start off, when they talk about Fibonacci, they usually start talking about how it occurs everywhere in nature. They're like, oh, look at how this sunflower, the pattern of the spirals are in the Fibonacci, the golden ratio. It happens again, right? And they'll count up, they'll be like, look at 13 spirals this way, 8 spirals the other way. Look at this beautiful. Oh, here's where I actually counted out. 13 this way, 8 the other way. They'll take a look at this and be like, look at the beautiful ratio. Amazing how this just occurs in nature. And guess what? It actually occurs on the charts as well. Take a look. I've got a little bit of a chart here. I'm going to just scroll back someplace random here. And they'll be like, look at how beautiful this happens inside trading, right? You have a pulse from this previous high here. Here's a high. It goes to a new low because this low breaks the structure of the previous low. So then we can go ahead and mark this out and look at how it retraces to the 618 level. That's the golden ratio. And it extends down to the 1618 level. Look at how beautiful that is. And then when it goes the other way, who really knows what the heck happened there? But this is a reversal. And now we have a confirmation of the other, right? And then they'll plot it out. Like here's the low. Oh, no, here's the high right here, right? They'll do this. They'll manipulate their charts like this. There's the high, and then it retraces down to here, and it goes to double. Look at how beautiful that is. So now that becomes the new thing, right? So this is what they do, and it's amazing to watch. You can see it. You get the vision gets painted for you, right? You know, so this pulse back up here, this was a part of a greater sized rate retracement. So that retracement showed up at the 23 level. So that means that it's going to extend down to the 1, 2, 3 level, which it does over here, right there. See? So you just have to be a little bit more patient. And then it goes up the other way a little bit and comes back down. But these are all Fibonacci ratios. You can plot it out and take a look for yourself. But here's the problem. Here's what goes on, okay? So let's go back in time a little bit more random. I'm already in replay. Here's a new high, right? So let's just go in here somewhere before the high actually occurs, because they're going to take a look at these different things. They're going to find the previous low, and they're going to draw their Fibonacci's from there, right? Because this is how they got to figure it out. You got to go from a low to the most previous low. So this trend took quite a while, right? So they got to go to where the trend reversed, and here it is right here. You know, came down, had some lower highs, a new low, and then it started forming higher lows. So that's the new one. Okay, so what we do is that we plot out the Fibonacci sequence. Look at that. Look at how beautiful that is. And then it retraces to here, right? You can see goes and makes this pulse, retraces to here. Now we're looking for confirmation it goes up, but it wasn't actually the whole thing. So this was actually the retracement over here. So now we have a B, right? So they plot it out. They go A, right? And then they'll go B, and then they'll go C, and what they're looking for is the extension, because it retraced back down to the 382, 382 level. That means it's going to go up to the 382, and look at how it perfectly hits that level. It's perfect. So there's our D. There's our D. So now what happens is that C becomes the new A because that's the new low that we're measuring, right? So then we move all these things over. D becomes the B. And then C, we're waiting for the retracement. Looks like it happens right here. And then we're looking for D. So then they'll move their fib. And they'll be like, okay, so there's our new A. This is our B. And we can see the C retraced to the 618 level. That's the actual golden ratio. It's beautiful. It's going to take us up to the 168 level. And look at that right there. They probably would even put their I've seen this. They do that where they take their take profit and they put it just a couple pips down from their target just to make sure that they get it. Or they might just be like, nope, I'm going to get it. And there's our new extension, guys. We had our, now this becomes A, this becomes B. What am I doing here? This becomes B. C is going to be a new retracement, and then D is going to be the extension. And so then here we have, there it is. Then it goes down. Here's our extension, right? Because this, move our Fibonacci to the A, to the B, from the window to the wall, almost a 0.5, right? But certainly the 168. That means we're going to make it to the 168 level on the top side, which we do right there. There's our target. So our C level is right here. Actually, the 5, yeah. So it would have been just the 5. So right there, which is fine. You'd still have to make this your B. So now we have A here. C is going to be, B, sorry. B is up here. See what's going on, guys? Do you see what's happening? And then the D is going to get extended. So now we plot this out. A goes here. B goes to the top there. And then we wait for C to occur here. That's great. See, all I'm doing is I'm just getting ready to get starting. Like I'm just getting ready to start trading because I need to figure out where am I in the sequence from that previous low back when I started. So, so my new D is the extension, right? This is A. This is B right here because that's where the actual extension finished. Is that right? I can't remember, guys. Where was this? This was down here. Yeah, okay. So this is the B. And then we're waiting for the retracement right here, right? Or was this one? Yeah, because it broke structure. So this is actually the B. And then here's your C. And what did the C come down to? Came down to the 382. So it means we got to go up to the 1382. Right there. So you see how this is working, right, guys? Okay. Now we know where we're at. That means that C now becomes A, D becomes the B, and then we're waiting for the extension, and actually we're probably waiting for the retracement. There's the extension. Oh, no, it was actually here. Yeah, it was actually here, and we're waiting for the extension, I believe. Or they might have been like, well, no, because look, there wasn't a real retracement. No, there wasn't a real retracement because it didn't come down to the golden ratio. So because it didn't come down to the golden ratio, not even within 5 pips, because sometimes they'll do that. They'll be like, you're allowed to have 5 pip forgiveness. So we didn't even reach 5 pips, within 5 pips of the retracement. So therefore, they might say this is actually the one, and we're waiting for, because we actually had a proper retracement here, right? So they'll do this. And we're waiting for the 168 to occur up here somewhere. And then they'll wait because they have to wait for their opportunity to actually show up, right? So here goes, and there we go. So now we've reached our D, which is awesome. That means that becomes our B. A becomes C, or sorry, C becomes A. And now we're waiting for a retracement. Just like so. So we wait for the retracement before we actually enter the market. Oh, we're still extending. We're still extending. Okay, so now there's our full extension because we didn't have a proper retracement. Now we've had a proper retracement. See? The retracement is now proper. And they're going to wait, use whatever confirmation they got to use. Maybe it's an RSI, maybe it's an oscillator of some sort. I don't know, stochastic, MACD, whatever. They're going to wait for that confirmation. But this looks like a great retracement because it really tested this line here, okay? So that becomes C. Now we're waiting for that confirmation. And that, to me, that confirmation is a close above this level here. Oh, so we retraced a little bit further, which is good. That's fine. Now we're waiting for a close above this resistance level. Come on. Where's the close above the resistance level? Coming back down. Maybe a little bit further of a retracement. Yeah. Looks like it. You got to look for the resistance level to be broken. This resistance level here. Unless we dip down to the next to the next level here, which we might do here. Okay, so now we're waiting for the retracement. Some people might be like, well, now I might as well catch some of this crap down here, right? So then they'll zoom into the 75-minute. See? And they'll be like, okay, so now I got to get my plots out. Where's, this looks like it here. Yep. And then it extends. Does it extend to where we need it? The 168 extends here. Okay, cool. So now this becomes, here's that. So now we're trying to catch it on the downside, right? On the smaller time frame. And oh my goodness, we're down into the, now we're down into the 236 level. Ooh. So now we can probably expect to see the retracement we need. Let's break that. Let's break the next point of resistance, which would be in here. Oh, man, now we're going the other way. Okay, great. So now we know. So we took the 161 level there. That puts this retracement here. And, oh, actually, yeah, no, that was the extension. There's the retracement. So now we go down to the next low. Right there, we got a retracement. Now it's going to the next one. So now we wait for the confirmation. We definitely took profit there. Or we would have. There's the extension, rather. Not that they take profit, but there's the extension. So now we can wait for the new high to form so that we can see the retracement. There it is. Yep, right there. A, B. Here's our retracement. We're headed our way down. And confirmation. Come on, bring us in there. There we go. There we go. Now we have our entry. because we broke down and closed below this point here. So that's a beautiful entry right there. So we're going to go ahead and enter the market. Finally, after all of this, now we can enter the market. And I get you can use other strategies involved with this, but I think you're getting my point. It took a long time to be able to get a trade simply because we're waiting for this Fibonacci sequence to show itself an opportunity. So we go ahead. Stop loss has to go above the previous high. And then our target is going to go to where that retracement occurred, which is 161. There we go. So now we can watch this extend to where we wanted it to go. Here we go. Here we go. Here we go. Come on. Come on, let's go. Come on, extend. Let's do this. What's happening? Nothing. Nothing. It's not extending. What's going on? I got a little bit of drawdown now. Let's go to the higher time frame and see what's happening. I'm okay so far, but I mean, it's going to go down. It's going to go down because that retracement, oh, stopped out. Okay, well, then that means that this wasn't the full retracement. You see? Now it's retracing to the 382 level instead. Let's see what happens. No, now it's the 236 level, and we broke. We're going to need to break this resistance here before we can see that it's actually going down again. Break that, break it, come on, break it. Oh, yeah, sweet. A little bit of retest, more retesting. I need to see an actual full close. Come on, come on, come on. You get my point. There we go. So now I can actually enter the market. Probably in here somewhere. Yeah, because that's the point of resistance. Or support, rather. So broke through support. Now we can go ahead and trade. And we're going to get our extension, guys. We're going to get it. Don't worry about the drawdown. It has to go. It has to go to the extent. Oh, I just got stopped out again. Now, I know. I'm using a small data set here, right? This isn't a full data set. This isn't a massive back test with, hundreds of trades or anything like that. But I'm giving you an idea of why it is I do not follow Fibonacci. He puts the fib in Fibonacci. We can't trade this way. I mean, you can. And if you are already and you're doing it, and you're doing well, continue. Don't let this stupid video change your mind. But if you're having a difficult time with Fibonacci's, like I did for almost 2 years, hanging on for dear life to this dream that I could make money off of Fibonacci. If you're thinking you're not making it work, consider that it's not designed to make you work. That's my reason for this video. I want people to recognize that the way that we're being educated around trading, the majority of education out there is not giving us a suffice, comprehensive, or consistent strategy. You have to draw from so many elements in order to make your trading work. And my intention with this channel is to help simplify what market movements look like. Go to my website and I talk more about how I came to this realization about market movements and what it is that we're really looking for. We're not looking for a retracement on a Fibonacci. We're not even looking for a pivot point. Okay? Like, take a look at this, guys. Here's a pivot point right here. Right? But what happens? You say when you get a pivot point and you get a confirmed full on bar going down, like look at all the volume we've got. This is great. So then you open a position and you're taken out right away. I'm saying, what's the similarity between this movement and this movement and this movement? What are the commonalities that happen in those movements that can be more consistently, more consistent? I don't want to use the word predicted, but it is more consistent, period, than Fibonacci, and combining that with trend lines and trying to combine that with pivot points and trying to combine that with all these different things. And again, hear me out. If you're swing trading and you're bouncing off of your pivot points and you're doing good, keep doing it. I'm trying to speak to the people who are like the majority of traders. 90% of traders lose 90% of their money in the first 90 days, and they're using these strategies that are widely taught. I know I'm a very meticulous, systemized, analytical, like OCD when it comes to building systems and making sure that they work. And I could not make Fibonacci work. And I'm not saying that I'm smart or because I've done many dumb things with my life, but this is about getting information to you that's going to help you trade, not like 90% of the traders who lose 90% of their money in the first 90 days. That's all I'm after. If you're winning using any of those strategies, keep doing it. Win. Make as much money as you possibly can. But that does not change the fact that 90% of traders are losing 90% of their money in the first 90 days using these same strategies. So I'm trying to bring forward a body of knowledge that allows people to trade in a different way that hopefully is a lot simpler, where you don't have to pay attention to 5 or 6 different principles of market movement in order to determine where your entries are. That's my objective. This video, again, went long. I'm trying to go under 15 minutes, but I get passionate about it, and it happens. It happens. Give me your feedback in the comments if you have any questions, or if you'd like some time with me. I encourage you, go ahead and book some time with me. I don't want you to go on without help. Let's set up your charts. Let's get them underway so that you can start trading in a way that I teach, that I'm conveying to people, and let's take control of your financial future. And I mean that in a very, very real sense, not a make millions of dollars sense. I just want you to feel like you have control of your finances. Take care.